So let's say Netflix is announcing earnings after the close and you think the price is about to collapse. Too bad there's nothing you can do to take advantage of it. Or is there? Today we're going to talk about a trading hack to take advantage of earnings announcements that happen after the close. Now, earnings announcements can have significant impact on a company's stock price, and traders who are able to accurately predict the market's reaction to these announcements can make significant potential profits. In this video, we'll discuss how to trade after hours earnings announcement using the NQ, which is the futures of the NASDAQ. Before we dive into trading after hours earnings announcements, let's take a moment to understand the NQ futures themselves. Now, the NQ are futures contracts that are based on the NASDAQ 100 index, which is a benchmark index of the 100 largest non-financial companies listed on the NASDAQ stock exchange. The NQ, or NQ futures, are traded on the CME, which is the Chicago Mercantile Exchange, and are used by traders to make speculative bets on the direction of the market. Many companies announce their earnings after the close of the market. There are some, though, that do announce pre-market and even during the market session. But we're going to focus strictly on how to trade the after hours. So let's do a deep dive on how you can trade after hours earnings announcements with the NQ. Now, the key to trading the after hours announcements with the NQ is to have a clear understanding of the market's expectations for the company's earnings results. You can use a variety of sources, including analyst reports, earnings estimates, get a sense of what the market is expecting. So let's talk about how the NQ reacts to tech stocks earnings after the announcement. So the markets themselves for stocks close at 4 p.m. You're done. Boop! Done. Bell rings. No more trading. Ding, ding, ding. It's over. Stock options. You're finished. Well, now Microsoft, as an example, announces their earnings after the close. Well, what do? You wait till tomorrow, or you buy stock in the post-market conditions, which you can wind up getting ripped off in the pricing of that stock by the time tomorrow morning comes around if you're looking to sell it potentially. Well, what happens is this. You can go ahead and when you find a Microsoft, a Netflix, one of the top holdings in the NQ, or in the QQQ rather, Microsoft is one of the companies that are in the top holdings of the QQQ, which is the NASDAQ 100. We really want to focus ideally on those top companies because they have the largest movement in the NASDAQ itself, or the NQ. So what we're going to do is we're going to have a futures brokerage account. You could open that up with many places, folks. You can open that up with a TradeStation. You could open it up with a TOS. We use a company called Trade Pro Futures. It doesn't matter who you use. You need to have a futures account. So what I'm looking for is this. I have a template set up on my TradeStation. If you're interested in a copy of that template, I will leave a link down in the description below where you can go ahead and get your hands on that futures-based template and duplicate what we have there. But basically what I'm looking for is this. I have the NQ open, which is the futures contract, and I have that stock open that I'm looking at. And I have the stock showing me the after hours quotes. And I'm watching that stock, and if I get a bullish announcement on Microsoft, as an example, Microsoft starts to rise, I'm going to look to trade the NQ by buying those futures to the upside. If Microsoft starts to crash, I'm going to sell the futures. See, that's all there is. We're not trading the options. We're just trading the future. If you think it's going up, hit the buy button. If you think it's going down, hit the sell button. That's it. You're in the trade either way, and then we're going to follow your risk profile rules for taking the exits on that trade. In conclusion, trading after hours earnings announcements using the NQ can be a lucrative investment strategy for traders who are able to accurately predict the market's reaction to these announcements. By having a clear understanding of the market's expectations and using the NQ, traders can make speculative bets on the direction of the market and potentially make significant profits even when the market of your main trading vehicle is closed. Until next time, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it, and remember, you're just one trade away. Go ahead and click here to check out another video.